Hello, good evening and welcome. I'm Divya Gopalakrishnan, and on behalf of CareEdge, I welcome you to our today's discussion on Indian airports scaling new heights. We sincerely appreciate your time in joining us for this webinar. We would like to welcome our esteemed guest speakers for today, Mr. Ashok Sharma, Chief General Manager, Project Finance and Structuring, SBU, State Bank of India, Mr. G.R.K. Babu, Chief Financial Officer, GMR Airports Limited, and Mr. Sundeep Malik, Head Portfolio Development, Zurich Airport International. This session will be moderated by Maulesh Desai, Director at CareEdge Ratings. We will commence this session with a presentation by Palak Vyas, Associate Director, and Urvesh Patel, Analyst at CareEdge Ratings. This will be followed by a panel discussion and a Q&A session. In case of queries, all participants are requested to key in your panel. We will take up your queries post the panel discussion. Now, may I invite Urvesh and Palak to make their presentation, please.
Thank you, Divya. Good evening and warm welcome to all the participants and esteemed panelists for today's webinar, Indian Airports Scaling New Heights. We shall cover today's session in 4 sections: traffic performance, capex guidance, and key bottlenecks for privatization, the regulatory landscape, along with the potential for non-aero revenue, and a quick glance at the financial performance of the major PPP airports. Towards the end, we shall present key takeaways and outlook for the sector. Let's begin the session with a quick look at the passenger traffic at Indian airports versus global traffic. As seen on the left side of the chart, the share of traffic handled at Indian airports increased from 3% in 2015 to approximately 5% in 2022. When we compare the traffic growth rate at Indian airports versus overall world airports before COVID, traffic at Indian airports grew at a much faster pace, with a CAGR of 16% from 2015 to 19, compared to world CAGR of 6% for the same period. In terms of GDP growth rate multiple, passenger traffic at Indian airports grew at superior 2.15 times of GDP CAGR, compared to global multiple of 1.52 times from 2015 to 2019. As per ITA's air connectivity ranking, India's rank has steadily improved from 9th in 2009 to 4th in 2019, only behind USA, China, and Japan. This bolsters investor confidence in the sector. In this context, let's analyze air traffic recovery post-pandemic and growth over the medium term in the next slide. Passenger traffic in India has witnessed V-shaped recovery post-pandemic, with passenger traffic reaching 96% of pre-COVID levels in FY23. While domestic traffic reached 98% of pre-COVID levels in FY23, international traffic attained 82% of pre-COVID levels. During FY24, passenger traffic is expected to reach 1.09 times of pre-COVID levels to around 375 million passengers due to buoyancy in domestic traffic and complete recovery in international traffic. CareEdge has reassessed overall passenger volume for FY24 on account of the grounding of 150 odd aircrafts as we speak. While this number is expected to exceed 200 by March 24, the impact on passenger traffic shall be minimal at 3 to 4% due to the extension of wait list by Indian Airlines. In CareEdge's opinion, the passenger traffic shall scale new heights during FY25 with a healthy CAGR of 14% over FY23 to FY25. Moving on to the next, let's look at the traffic share from metro as well as non-metro airports. As seen from the left side of the slide, the share of traffic handled at non-metro airports rose from 32% in FY15 to 40% in FY23, indicating a healthy traffic CAGR at non-metro airports. This trend of higher growth rate at non-metro airports continued for H1 FY24 compared to the pre-COVID period, that is H1 FY20, as seen on the right side of the slide. The addition of new non-metro destinations is a key traffic growth enabler at the non-metro airports, apart from key growth propellers presented in the next slide. Air traffic growth in India has a multiplier effect with GDP growth rate. As seen from the chart on the left side, during FY15 to FY19, passenger traffic CAGR stood at 2.15 times of the GDP CAGR. Over the medium term, CareEdge opine that passenger traffic is expected to grow at a 2 times GDP CAGR for FY23 to FY25. India's economic landscape is further catalyzed by favorable demographics, boasting the largest working population. In 2020, 67% of total population fell within the working age bracket of 15 to 64 years. This demographic advantage, coupled with increasing middle class enjoying increased disposable income, is said to propel the passenger traffic. The addition of over 1,000 aircraft by various Indian airlines is poised to stimulate passenger growth further. Going forward, the extent of impact due to the launch of new premium and high-speed trains by Government of India, such as Vande Bharat, Tejas, etc., shall be key monitorable. Thrust on greenfield and brownfield expansion of airports with the policy support from government towards non-metro cities under the UDAN and RCS are significant positives, as explained in the next couple of slides. CareEdge estimates capex of approximately rupees 50,000 crore over FY24 to FY26, mainly to decongest existing capacities and create major greenfield capacities at 3 locations. This capex shall be dominated by the private airports with a lion's share of 80%. As inferred from the chart on the left, 60% of capex is estimated at non-metro airports, auguring well for the traffic prospects. The total debt requirement is estimated at around rupees 35,000 crore. On the right side of the presentation, it is highlighted that the share of traffic managed by Indian PPP airports surged from 53% in FY19 to 62% in FY23, which is attributed to the inclusion of 6 new PPP airports. CareEdge foresees a continued ascent, estimating the share of PPP airports in the total traffic to reach 70% by FY25. This trajectory is underpinned by the operationalization of greenfield PPP airports and brownfield capacity expansion at the existing PPP airports. Handing over the session to my colleague Palak.
Thank you, Urvesh. Now let's move on to the next part of presentation. Let us glance through the status of UDAN, that is Ude Desh Ka Aam Nagrik or Regional Connectivity Scheme. UDAN was launched in the year 2017 by Government of India with the objective of enhancing connectivity in the remote areas, providing access to affordable air travel, and extending viability gap funding in initial period of operations to airlines and airports from central as well as state government. Under UDAN scheme, as of FY24, while 75 airports have been operational, of the targeted 100 airports, there has been only 50% achievement of routes vis-a-vis the target. Also, of 499 routes operationalized under the scheme, only 223 routes are operational as of October 2023 as per industry sources. Lack of commercially viable routes due to sluggish demand, infrastructural constraint, and weak financial flexibility of small regional carriers are the prominent reason for lack of sustainable momentum for UDAN. Moving on next is the status of privatization of existing airports under National Monetization Pipeline. As inferred from the chart on the left-hand side, of the total monetization target of around 21,000 crores over FY22 to FY25, NMP had estimated funds inflow of close to around 17,000 crores till FY24 through monetization of 20 airports as well as divestment of existing stake of Airport Authority of India. In order to accelerate the pace, GOI has approved privatization of 13 airports through bundling of 6 major airports with 7 smaller airports. However, no progress has been made in this, with privatization awaiting takeoff, and the aforementioned timelines appears to be ambitious. In CareRatings' view, these timelines are likely to be deferred further. Moving on toward the next session is the regulatory landscape. The regulatory return on the aero assets with a hybrid tilt tariff structure involving true up or true down of the revenues take care of the traffic fluctuations at the time of subsequent tariff determination process. There is an evolution of a well-defined regulatory environment in India with a mature tariff setting process. As seen from the center of the slide, over the years, there has been a significant reduction in delays in the issuance of tariff order in the existing PPP concession. In fact, tariff order issued for the 2 existing private concessions during FY22 had a marginal delay of around 6 months, thus bolstering investor confidence. Favorable changes have also been incorporated with respect to revenue sharing with authority, which is now being linked to per passenger basis as compared to the percentage of total revenue. Concession period is also elongated to 50 years as compared to the earlier stipulation of 30 years with the provision of extension by another 30 years. However, it is pertinent to mention that delay in the issuance of first final tariff order post-privatization, as well as for greenfield airports post-challenge from the credit perspective. Care Rating has noticed average delay of about 1 to 2 years for issuance of final tariff order while issuing interim tariff order for ad hoc amount. Let us now look at the comparative analysis of tariff order before and after privatization. Care Ratings has done study on the tariff orders for 2 private airports. As seen from the table, the capex requirement has increased post-privatization to enhance capacity and improve operational efficiency, leading to increase in the average regulatory asset base by almost 5 times. This necessitates approximately 2.5-fold increase in yield per passenger as highlighted in the table. Higher yield in tariff order augurs well from the credit perspective. Nevertheless, it is also pertinent to note that ERA has deferred around 12% of the approved annual revenue requirement, that is ARR, to the next control period. Deferment of the ARR acts as a deterrent from the project IRR as well as debt structuring perspective. Now, moving on next is the non-aero revenue, which is the second major revenue source for the airports. As seen from the graph, non-aero revenue for the 5 major private airports has been on an increasing trend and stood at 52% of the total revenue during FY23. Care Rating expects likely increase in the non-aero revenue per passenger by 1.4 times in FY24 as compared to the pre-COVID levels of FY19. However, non-aero revenue per passenger for international peers is 2 times to 3 times as compared to the Indian airports, indicating significant headroom for the segment. Unleashing non-aero revenue is directly proportionate to increase in the international traffic. Ratio of an ordered aircraft to in-service aircraft in India is one of the highest at 2.7 times amongst the global peers. Therefore, Indian carriers have an opportunity to serve more direct services to unleash international traffic potential. As per industry sources, average transaction value of Indian airports is largely in line with its global peers. However, penetration rates are relatively lower. Therefore, there is a need to enhance product offering. Also, through use of technology and analytics, airport operators can better predict passenger preferences and hence increase customer satisfaction. We shall now take a look at the cargo potential, which acts as a safety net for the sector. Air cargo recorded CAGR of 9% over FY15 to FY19 and is expected to grow at CAGR of 8% till FY25. Care Rating believes that the government initiatives such as National Logistic Policy and Krishi Udan will help in gaining traction in the cargo volumes. We shall now proceed to the Aerotropolis, an untapped developmental opportunity for Indian airports. As seen from the chart, there is a huge land bank of about 2,400 acres across major airports in India, of which nearly 85% land is untapped. Therefore, city-side development of land bank is important for value creation and monetization of non-aero revenues. Airports worldwide have gradually shifted towards becoming a business and retail hubs instead of restricting themselves to air travel passengers. Moving on to the last part of our presentation, let's look at the aggregate financial position of 9 private airports, which handles about more than 50% of India's total passenger traffic. The revenues are estimated to grow at a CAGR of 18% over FY23 to 25 due to growth in traffic and proposed issuance of tariff order at 3 airports. Healthy growth in TOI is expected to translate into EBITDA growth with an estimated CAGR of 22% over FY23 to FY25. The leverage, that is net debt to EBITDA at the end of FY24, is expected to improve to 6.4 times considering scaling up of operations. Further, longer residual concession of the airport also continues to impart financial flexibility to Indian airports. Now, looking at the key takeaways from our today's presentation, Care Rating estimates passenger traffic in FY24 to reach 1.09 times of the pre-pandemic level. Debt of 35,000 crores is expected to be raised to fund the capex program of 50,000 crores over FY25 to FY26. Timely release of tariff order for existing airport is a credit positive, while challenge persists for first tariff order issuance. Care Rating believes that the non-aero revenue potential can be tapped through increased transfer traffic and higher penetration rates. Care Ratings opine that despite huge capex, the leverage levels are likely to reach comfortable levels supported by increased scale of operation and EBITDA expansion. Overall, the outlook for the airport infrastructure sector is stable, with airport scaling new heights. Thank you.
Thank you, Palak and Urvesh. As mentioned earlier, all attendees are requested to key in their questions, which we will take up during our panel discussion. Now, may I invite Maulesh Desai to take over the session, please? Maulesh Desai is Director and Rating Head with CareEdge Ratings for the transportation sector and handling the portfolio of infrastructure companies. He holds a bachelor's degree in engineering, MBA in finance, and CWA. He is also an associate member of ICWAI and certified associate of Indian Institute of Bankers. He has more than 18 years of industry experience, including 15.5 years with CareEdge Ratings. Prior to joining CareEdge, he worked in credit appraisal and credit operations in a large private sector bank. Over to you, Maulesh.
Thank you, Divya, for the quick introduction. Many thanks to Palak and Urvesh for wonderful deck presentation. Good evening and very warm welcome to all participants. Let me begin this session with the quote from H.W. Longfellow. A single conversation across the table with a wise man is better than mere study of books for 10 years. Indeed, it is our pleasure to have experts to discuss threadbare on the airport sector and share their deep insight with us. I would now like to introduce each one of them in alphabetical order. First one is Mr. Ashok Sharma. Mr. Ashok Sharma is Chief General Manager, Project Finance and Structuring, Strategic Business Unit at State Bank of India. He is associated with SBI since 1991 and brings along with him rich experience of over 3 decades. Mr. Sharma is heading Project Finance and Structuring Strategic Business Unit of SBI since September 2022, wherein he leads large project finance transactions for infra as well as non-infra player, both in India and overseas. He is also one of the members of the task force set up for National Bank for Financing Infrastructure and Development NAFID. He had served as a Vice President Credit as SBI Singapore also. Welcome, Mr. Sharma. Next panelist is Mr. GRK Babu. Mr. Babu is a Chief Financial Officer, Airport Sector of GMR Airports Limited since 2018. He plays a pivotal role in strategic refinancing solutions from domestic and international sources for GMR Airports Limited and its subsidiaries. He has over 34 years of rich experience in handling gamut of responsibilities, including fundraising, treasury, fund management, etc. He joined in GMR Group in 2007 as a CFO of GMR Hyderabad International Airport Limited and moved to Delhi International Airport Limited as a CFO in August 2011. Mr. GRK Babu is a qualified chartered accountant, company secretary, and also holds master degree in finance. Very warm welcome, Mr. Babu. Our third panelist for today's session is Mr. Sundeep Malik. Mr. Sundeep is head of portfolio development at Zurich Airport International. He has over 2 decades of experience in international business development, M&A, regulatory framework, project financing, and asset management in the airport sector. Since March 2020, he was CFO at Noida Airport, India, and relocated to Zurich in 2011 to take up the current role in Zurich Airport International. Prior to that, he was based in Singapore for over a decade with Changi Airport International, with focus on business development, investments, and asset management in the airport sector. Welcome, Mr. Malik, in today's session. It's time to set the context before we begin the discussion. We are in dynamic phase with respect to air traffic scaling new heights. In India, lending opportunities to scale up the capacities, conducive regulatory environment, rising non-aero revenue per pax, and longer concessions augur well for the airport sector. Yet, some of the pertinent questions are: how big is the investment opportunity in India for the airport sector? What all needs to be done to accelerate the pace of privatization? How to unleash the monetization of non-aero revenue as compared to global peers? These were some of the questions we had in our mind when we decided to hold this webinar and invited our experts to deliberate on these ponderables. I would not like to impose further on this, and I am sure our experts will enrich our knowledge while bringing new perspective. So my first question to you, Mr. Sundeep. Undoubtedly, we are in interesting time with respect to passenger traffic reaching to 1.09 times of pre-COVID level in India, and India is marching towards third rank globally after USA and China. Also, as mentioned by Urvesh in the presentation, passenger traffic growth CAGR has a favorable multiplier to GDP CAGR in India if we compare it with the rest of the world. In this context, as a strategic investor, how do you see investment opportunities in India as compared to the rest of the world?
Thank you, Maulesh, and thank you to CareEdge and to my esteemed panelists as well. Very happy to connect over the discussion today. I think, Maulesh, you have raised a very important point, and from our perspective, we do look at investments on a global perspective. And I think some of the key parameters that we typically look at is what is the long-term growth potential in that market. We also look at the concession framework, the concession terms, and definitely what is also important to us is the pipeline of the projects or opportunities that are available in the market. Last but not the least is the airport economic regulation. I think that also plays an important role. Now, if I were to apply all these parameters, say to the Indian market, starting first with the long-term growth potential, I think this was also well covered by your in your presentation a short while ago. India has a rising middle class. There is a fast urbanizing population as well. And if we look at the aircraft on orders, more than 1,500 aircraft on orders, and India is definitely on a way path to becoming the third largest domestic aviation market in the world. I think from that perspective, India definitely presents a very strong long-term growth potential. The second parameter I would focus is on the concession framework. I think it was also highlighted in your presentation. We do see a long-term concessions in India. This could range anywhere between 40 to 50 years. That is important. The second part is the capital expenditure. The capex requirements are also typically triggered with traffic demand. I think this helps a lot in improving the financial viability of the projects as well. The third aspect I would say, which I mentioned earlier, is the pipeline. And I think this was also highlighted. India definitely presents a lot of opportunities, both in the brownfield and in the greenfield projects. What we look at is a pipeline of 25 airports, which are to be monetized over the next few years. This will include larger airports such as the existing Chennai airport, as well as brownfield operating non-metro or regional airports as well. My assessment is, given the strong traffic demand in the Indian market, most of the other Indian metros, whether it could be Chennai, it could be Pune, they will need a second airport in the short to mid term. We do have second airports coming up in Delhi and Mumbai, which is a very positive sign to cater to the growing traffic demand. And moving forward, we would see a similar trend for other larger Indian cities as well. So, from my perspective, India remains definitely a very promising market from an investor's point of view.
Yeah, absolutely. Yeah. So it's quite reassuring. And thank you, Mr. Sandeep, for bringing an important perspective here of a growing economy driven by the growing household consumption. So this, along with the new route development expected because of the stronger order book of airlines and increased spending on infrastructure, all those parameters are expected to surge the traffic on the non-metro airports as well, that we have also seen in the presentation. So my next connecting question is to you, Mr. Babu, on this. So how do you see the potential of non-metro airport going forward? In twofold. One, in terms of a growth in passenger and two capex requirements.
Thank you, Maulesh, and thank you, Care team, and welcome all my colleagues on the panel. As far as the non-metro airports are concerned, actually they are doing much better than the metros now. The growth at non-metros, traffic-wise, is exponential, and they are doing much better. So that's why if you look at it, you have already made a presentation. The share of the non-metros compared to the metros over a period of time is going up, and they are going to be the stimulators for the traffic. Earlier, we used to have the transfer taking place from one non-metro to another non-metro. People have to transit one of the big four metros or otherwise either the Hyderabad or Bengaluru. Now the connectivity has gone up substantially. For example, our Goa is now connected, which is a non-metro, is connected to more than 27 destinations other than the metros. So that actually clearly shows the potential of the traffic, potential of the passenger growth, which is available in India in the non-metro sector. Coming to the, non-aeronautical revenue growth, I suppose that is a question, Maulesh, that you have asked. Non-aero revenue in the non-metros, that is what we are trying.
What we asked is what will be the passenger growth going forward in the non-metro vis-a-vis a metro, and a corresponding capex requirement to meet that growth in passenger. Non-aero at this juncture we have not asked.
Okay. In case of the capex, as far as the metros are concerned, I think more or less they are coming to an end, except the new airport which is coming up, the Noida, as well as the Navi Mumbai, where the capex is going on. And another new airport which is coming up is Bhogapuram in case of the Vizag. We have already started we have completed the entire financial closure, and we are starting the construction, which is now requiring almost about 4,700 crore capex. So other than these major capex which are already completed, for example, in case of the GMR, we have completed the entire capex of Hyderabad and Delhi. We have almost spent about 20,000 crores in the last 4 years together. So we will be completing the entire expansion by end of this year. And Goa, we have just completed the entire capex and started the operation more than 3,400 crores. So we don't foresee right now any new capex which is coming up other than our Bhogapuram airport. But the moment the privatization starts, then again capex excel will start. In addition to that, AI anyhow is also setting up some other new airports, smaller airports, where the capex will flow. That is what our assessment as of today.
Yeah, absolutely, sir. So prima facie, what you are saying is that the going forward non-metro airport would be the stimulator for the traffic, mainly because of the new route developments by the Indian carriers. And second, in terms of capex, you are saying as of now, Bhogapuram is the only capex. But going forward, once AIA would able to monetize those airports through privatization, or once they come out with any greenfield airports, so then the capex would be there.
Absolutely correct.
Understood, sir. Understood. But in one connecting question, just from a risk perspective, that would like to ask to you, do you expect any short-term challenges in the passenger traffic, mainly because of the lot of aircrafts on ground as we speak today? That is on a short-term challenge. And on the medium-term challenge, do you expect any threat due to large-scale investment by railways in high-speed trains, including Vande Bharat? So these two questions, sir.
The first one is there will, even though some aircrafts are getting grounded, yes, we know very well. We are one of the major operators in India. We've been talking to the various airlines. The traffic is not likely to come down. The growth will be there. And this year, both Air India and Indigo are likely to take delivery about 100 aircrafts. But of course, some of the aircrafts are getting grounded also. We know the technical reasons. But if you look at it, the ATM per passenger, actually it is going up. This year is almost touched 92, 93. Normally, the norm is about 85, 86. So the trend may continue to be at a higher packs per ATM to meet the demand of the passengers. It will be a short period, maybe about a year or so. After that, since the deliveries have already started, both to Air India and Indigo, then it will take care of the traffic growth. So we don't foresee any fall in the traffic in the coming years, at least next 2 to 3 years.
Understood, sir. And in terms of with the thrust on railways, mainly on a high-speed railways.
That is actually the amount of traffic what railways carry versus air traffic. Air traffic is very minuscule compared to what railways carry. We don't foresee any threat as such from the railways right now for the aviation industry.
Understood, sir. So very simply put, the broad points that you have highlighted is the higher, you have observed the higher ATMs per passenger this year, and this higher ATM per passenger that would take care of the aircrafts on ground. And second point is that there is also a pipeline of the new aircraft. So these two will take care of the supply related challenges and will lead to growth. So growth will not be affected because of these supply related challenges. Understood, sir. So I would now request Mr. Sharma to come in here for a follow-on question on the risk assessment of the large capex. So as we have also seen in the presentation, the sector has planned a capex of around 50,000 crore over next 3 years from FY23 to FY25. So as a lender, what are the key risks that you think should be identified and mitigated, sir?
Say, this sector is a hot cake. So if I go to Sundeep ji and Babu Sahab, so there'll be long queue in front of them. So just to signify that the sector is very attractive. See, one basic differentiator here is what we call the concept of the control period model. So that means in the first control period, if there's any surplus or shortfall, it can be adjusted in the next control period. Coming back to the how do we, as a banker, we look at the risk. So first thing we look at if it is a greenfield sort of stuff, whether the land 100% is there or not. So the 1% which is not there, where it is at the corner of the whole thing or in the center. So we do a ABC analysis to understand that the required land for the operations is available, without which we typically do not start disbursing the money. The second thing we look at, okay, so who are the EPC contractors? Do they have the ability? Do they have the manpower? Do they have the equipments? So whether the right kind of EPC player has been picked up for the job. Because sometimes, let us say, we are assessing the implementation period is, let us say, 2.5 years, and it spills over because of the inability of the EPC player. So those kind of aspects we look into. Other aspects we look at, normally the large players are there, so equity visibility has not been a major challenge, but we do examine that if there is any surprises. So whether any surpluses are available with the promoters are big enough to handle the cost overrun, the time overrun, those kind of stuff. One more aspect which comes into, see, whenever you're looking at a greenfield airport, so whether the traffic estimates have been realistic. So as you know, there are 3 revenue streams, so aero revenue, non-aero revenue, and the land monetization part of it. We try to see whether based on the aero revenue alone, am I breaking even? So maybe the what you call the ice on the cake could be from the non-aero and the land monetization, but am I able to fill my stomach based on the aero revenue alone? So that gives a big boost to the viability part of it. Of course, as you have seen that now, particularly in the metro part, the non-aero revenue is really picking up, and of course, land monetization part of it, where you maybe have shopping malls, hotels, it takes time. So maybe 5 to 7 years down the line, they will give you money, but not in the very beginning. I think these are some of the aspects which we look at it when we are assessing revenue. And I'll add the last line again that we haven't seen this sector being looked down by any of the lenders. So there are a large number of lenders in the market who are happy to lend to this sector.
Thank you, sir, for sharing valuable insights. So very simply put forward some of the points in terms of the greenfield airports. By financing greenfield airport, you mentioned that you will check for the land availability, and for operational in operational phase, you will run that model only with the assumption of the aero revenue in a stress case with a lower assumption on a real estate revenue, sir. So your response does echo with our criteria on airport sector, care ratings criteria on airport sector. So it's quite encouraging. So my next question is to Mr. Sundeep on a regulatory landscape. So as also Mr. Sharma has mentioned that we will go with the aero, we will give a higher weightage to the aero revenue where there is a certainty of the cash flow. So since you have a wider experience also globally, so what is your take in the regulatory framework in India vis-a-vis internationally?
Thank you, Maulesh. I think this is a very important question because when we do evaluate investments in the airport sector, I think the economic regulation plays a very important part. Now, if we look at the Indian situation, I am happy to share that the Indian airport economic regulation is in fact at a very advanced stage. I would say it is much advanced what we see in other countries globally. Now, primarily the factors there are like Sharmaji also highlighted. It's a very well-defined regulatory framework with this concept of a control period. The 30% hybrid tilt structure is also very well defined. And we also see that an independent airport economic regulator has been set up way back in 2009. So that gives a lot of confidence to the investors in the framework. Now, when I say globally, we look at other markets as well. One market which I typically give an example is the Indonesian market. It's also a growing market within Asia. But if we look at the economic regulation in that market, it is still evolving. So it is still not reached at a stage what we see in the Indian airports. The other factor which I believe is also important is what kind of stake, an equity stake, can a foreign investor or a private investor can hold in an airport. Now, if you look at the Indonesian market, foreign investors or private investors can hold only up to 49% stake. 51% is still held by the airport authority or the government airport authority. So in a way, I would say that the Indian regulatory framework is very advanced. I think it is a very stable framework, and that is also, in fact, reflected what Sharmaji mentioned, that lenders have a lot of comfort in lending to this sector in India.
Well articulated, Mr. Sandeep. And your response also does echo with our presentation, mentioning a mature tariff setting process in India and conducive regulatory environment. So having said that, delays in issuance of a first tariff order post privatization and also for a greenfield airports pose a challenge for the sector. So coming to you on this aspect, Mr. Babu, what is your take on this? And also if we see also in the presentation, pace of privatization is relatively slow as compared to what we targeted under national monetization policy. So how can the same be fast tracked?
So the first part of your question with regard to the regulations, yes, I think I have seen all the three regulatory period in case of the GMR. Since the Airport Regulating Authority era, Economic Regulatory Authority, started only 2009, their setup. So they were absolutely new, and those days actually they went around the entire world and understood the regulatory philosophy and come back. The first regulatory order took quite some time, especially both in case of Mile and Dial, and then Hyderabad Airport. Over a period of time now, they have matured enough. Most of the issues which have been raised by the airport operators have been settled either at the tribunal level or some cases have gone up to Supreme Court, and Supreme Court verdicts have also become. So now, as Sundeep has pointed out, the regulator has become much mature, and now all the rating agencies, even international rating agencies, are recognizing that we have moved into a matured environment. At the same time, if you look at it now, the tariff order are also coming much faster. For example, in case of our Goa, we have just completed the project in January, started operations. We've already seen the consultation paper and expecting the final order in the next 2 weeks' time. So maturity is there, but at the same time, further, if we are able to get the tariff orders just before beginning of the control period, that will really set the ball rolling much better for the airport operators. The cash flow mismatch will not be there. So that may take a little more time for the era, but we are looking forward at least next 2 to 3 years, they should reach that level. So the cash flow mismatch is the one which actually airport operator passes through a lot because of the tariff determination delays and a true-up mechanism. Those that will be taken care of if they are able to provide the tariff orders before start of the concession. That is a control period. That will be much more helpful to airport operators. What is the second part of your question, Maulesh?
Second part of the question is on this slow pace of privatization. So as compared to the NMP targets, we are running quite behind. So what all should be done to accelerate this pace of privatization?
It is in the hands of the government. I think we are expecting the last 2 years, it was a slowdown because of the one is the COVID period, and the government was also in dilemma whether there will be takers or not. Since the traffic has been fully bounced back and tier 2 cities are really doing very well. So now the government, we are in all probability will push for the privatization of the next 13 airports very shortly. That's what we are hearing from the government, and we have also been continuously in touch with the government and inquiring about it. Most probably, we are expecting by next June or by September, we should be able to hear on the next round of privatization of the 13 airports.
Understood, sir. So, and in terms of the tariff order issuance, you have rightly made this point that if this tariff order is available before the beginning of the control period, it would be helpful from a developer also, and from credit perspective also, sir, it would be helpful to us. So, Mr. Sharma, I would like to take your views on this front. As also we have seen in the presentation that the partial shift of annual revenue requirement in the next control period to take care of the stakeholders' interest. So that is one of the concern from the credit perspective. Another one is also we have seen is the delay in issuance of the first tariff order. So as a lender, what measures do you take while taking exposure in the greenfield projects where there is no tariff order? And what needs to be done to attract more investors to achieve these NMP targets?
Yeah. If you look at the performance of the larger airports in the country during the COVID period, so we all have seen that resilience has been there and they have been able to come out without much of a trouble. So that means the surpluses that are available and the way airport developers, they keep all those things in mind to keep some cash with them. Number one. Number two, typically banks would have some suitable DESRA available, some suitable working capital facilities available, so that they are able to handle these cash flow mismatches reasonably well. Of course, as Babu was saying, that some delays are observed, but I think industry has factored in these delays and they have put in place those mechanisms which lenders and the developers together both are able to handle without any impact on the asset quality. Regarding the NMP kind of stuff, we keep talking to the ministry on this. I think a lot of work is happening, and the country has realized the kind of development which can come through in a PPP model. It's much more efficient, much more faster than probably a government would do. As of now, we are seeing the airports mostly wherein there is some money going to the government. We have not seen those kind of airports wherein sort of VGF is predominantly there. So I think a lot of debate is happening over there. So can we look at both the models prominently, wherein, of course, wherever surplus is there, the developers are bidding, okay, per passenger revenue we are going to offer. But wherever the airports have not reached that level of maturity, that surplus is available. So maybe after 5 years, 7 years, 10 years, the surplus would be available. So can you look at those models also and hand it over to the private developer? Because in terms of cost efficiency, in terms of operational efficiency, everything, the private developer brings in those kind of things, which for a government operator is difficult. One thing you must have seen, let us say if you go to, say I keep traveling to small airports, if I put it that way, it's a lot of traffic. Getting a ticket not easy. It's not that suppose tomorrow you want to travel, you get a ticket. So that means there is a lot of demand over there. Occupancy level quite good. Tickets not cheap. That means there is a market which is evolving, and a lot of players now are utilizing that kind of resources. So we hope that probably it's a matter of time only. The government would certainly look at this aspect of utilizing PPP model for this. Number of, I think, airports in the country has almost doubled last couple of years. So there was earlier some figure of 74 airports, now close to 150 airports. So that way, tremendous growth. And I'm very sure that the PPP model, the private developers would certainly have a much larger role in the development of the airports.
Understood, sir. So in terms of risk mitigation, prima facie, what you are saying is the debt covenants like DESRA and cash trap, so that can take care of any mismatch happen because of the delay in the issuance of the tariff order. And yes, sir. Understood, sir. So now let me get in Mr. Sundeep here for our next discussion on a potential of a non-aero revenue. As mentioned by Palak in her presentation, the non-aero revenue per pax is on increasing trend for 5 major airports. However, if we see the non-aero revenue for AII operated airports, it is quite low. Further, India continues to be on a lower side on a non-aero revenue per pax front. If we compare it with some of the international airports like Singapore, Dubai, London, Hong Kong, to name a few. So as a global player, how do you find the potential of a non-aero revenue in India, including duty-free segment?
Yes, I agree, Maulesh. Non-aero revenues is one of the key drivers of an airport's business plan. There is no doubt about it. If I look at the potential for non-aero revenue, I think we could also look at it. What are the key drivers for the non-aero revenues typically in an airport? One is definitely the spending ability of the traveling passengers. And the other factor is, which I think was also highlighted in your presentation, what is the proportion of international traffic as a percentage of the overall traffic that is served at an airport. Now, if I apply these two parameters for the Indian airports, if we look at India, India is definitely the fastest growing market or economy in the world. In fact, I was just looking into the last quarter GDP numbers, which came as a kind of a boost with 7.6%. Now, India also has a very young population. The disposable income is also rapidly increasing in India. Now, all these factors, if you look at it, definitely they point towards a positive direction in terms of higher non-aero revenue potential. The other aspect is definitely the international traffic. Now, if you look at even the larger airports in India, the proportion of international traffic ranges between, say, 20 to 30 or 30 to 35%. But we have to take note that it's a combination of both inbound and outbound travel. Now, when I say inbound travel, definitely this is linked to the international tourism. It is also linked to the business travel that comes into India from overseas. And if I look at the outbound travel, in fact, India was the largest market for outbound travel in Asia in 2022. And I was also reading into some statistics, some figures. Indians are expected to spend over 40 billion US dollars for outbound travel in 2024. So definitely the proportion of international traffic at Indian airports will also increase rapidly. In fact, in today's news, I was just looking into it, non-metros airports, regional airports, and I was very happy to see like airports such as Surat will also be shortly connected to destinations in Southeast Asia. So you can see the potential not only of the larger airports, but even of the non-metro regional airports. Their proportion of international traffic is bound to increase, which will definitely have a positive impact on increasing the non-aero revenues. The last factor, which I would say is also important from an airport's perspective, an airport operator has to keep the focus on the passenger experience. Now, why I say so, if you look at the shopping trends, say in a shopping mall, as compared to the spending trends in an airport, airports still do have a lot of impulsive shopping, or which is last minute shopping. Now, the kind of experience that we create at an airport at various touch points whether it's the check-in or the security or the immigration. Now, these processes should be as smooth as possible. I think all this will definitely help in creating the right kind of atmosphere, I would say, or an environment for passengers to spend more. So creating the best passenger experience is also in a way has a positive influence on improving your non-aero revenues.
Yeah. So thank you very much, Sandeep, for bringing important points. Two important points you brought. One is the higher outbound travel from India and higher spending, and second is the higher customer satisfaction. So these two can lead to the higher non-aero revenue, according to you. So, Mr. Babu, I would like to take your views on this connecting question, because you are operating country's busiest airport at Delhi. So, in this front, would like to know one, how this better customer services and reducing congestion would help in fetching the higher non-aero revenue. And second, since the Ministry of Civil Aviation is also working on policy to boost the transfer traffic in India, and also there is a higher order book of fleets, so that can connect to many countries from India. So, what's your take on this in terms of making in India an international hub?
The first point with regard to the non-aeronautical revenue and the spend per passenger, I 100% agree with what Sandeep has said. See, when a passenger comes to an airport, if you look at it, the Indian, not one Indian, any passenger, when he gets into an airport, he is always under anxiety that he has to complete his check-in, then he has to complete his security, then he has to complete it to the identify the boarding bridge. He's always under anxiety. So, from the JMR Airport's point of view, this is an area where we have deliberated a lot. So, we should make a passenger very comfortable. That's what passenger experience we call it. When he gets in, when he knows very clearly how the check-in is completed and the security clearance is done, and entire boarding gates are very clearly visibility, and especially the movements how he will do, and the arrangement of the shopping is very, very important. You can't make it too much of clusters, too much of congestion. That will not help for the passenger. If you increase the more and more shops, you will not get a higher and higher revenue. It's not. The penetration actually goes down. So this is where area we have been spending at. We have seen a good trend whenever we are able to provide a good merchandise, which is and the latest compared to the downtown, and the prices are maintained at the equal to downtown level. The spend per passenger actually goes up. Actually, impulsive buying, as rightly pointed by Sandeep, goes up a lot, and we are seeing that trend, and that is actually improving the non-aeronautical revenue of the airports. But every airport has to make their own efforts to increase it. That is one. The second part is that you have always peaks in the airports. During the peak time, there is a huge rush, and there is a non-peak time, there is a less rush. So we are also trying to look at it, how to normalize the traffic throughout the period, so that the availability of the merchandise, the availability of the passengers' time will help us to boost the non-aeronautical revenue. It is immediately not possible, but we are trying to see increased number of peaks. Instead of only morning to evening peak, you can have a different types of peaks. Number two, to the extent possible, normalize the traffic so that the spend of the passenger goes. This is the area which we are actually concentrating in our JMR airports, and we are able to see some results, good results also. Coming to the transfer packs, yes, India used to have a very less transfer pack. There are two types of transfer packs. One is domestic, otherwise international to international. Third one is domestic to international.
Okay.
So the India share of international to international is very less. And we used to have only 1-2%. This is the way the government is now looking at it. They want to make Indian airports as hub centers. Both they are talking about the Hyderabad, basically Delhi and Mumbai and Bangalore and Hyderabad and other metropolitan cities. As of today, all Indian traffic is passing through the Middle East. So this is where the government is concentrating, that we should have direct connectivity to various destinations across the world. This is what they are pushing the airlines like Indigo and Air India. Fortunate now we have two strong airlines in India who are now working very hard. Over a period of time, we are saying that we are going to have a huge transfer packs international. Domestic transfer tax has already touched almost 20%. Now it is a very healthy growth. And that is what now as of today's situation, Maulesh.
Understood, sir. So the big messages that I can gather from you is one is the normalization of the traffic throughout the day for enhancing passenger satisfaction. And in terms of the higher transfer traffic, focusing on international to international, more international to international routes. So that can help in making India hub for the transfer traffic.
For that purpose, we have already made full arrangements as far as the Delhi airport is concerned. So we have concentrated, we have enhanced the facilities for international to international transfer. So that is now helping the international airlines also to consider now Delhi as a transfer hub.
Understood, sir. Understood. So now, in a short while, we will take questions from the audience also. So all the participants are requested to key in their questions. So before we take the questions from the audience, I would like to ask the last question of this panel discussion to Mr. Sharma. So we have discussed threadbare on the sector and emerging opportunities, and you have also the vast experience in funding of the sector and overall in infra funding. So what are the key takeaways and learnings basis your experience while financing this segment of the infrastructure?
Maulesh, before I get into the question that you're asking, I want to add something what Mr. Babu said, the non-aero spending. So I was traveling to an airport. So see, when typical Indian consumer महंगा होगा, airport shop महंगा होगा. So guy has put a board. We are having the same price in the city. So innovations. So that means one part is that you ease out the operations at the airport. A second, this kind of thing. When we had the mindset, no, airport kind of stuff would be costly. So I really found it very attractive that he's put a simple board. We are priced the same as the price in city. So you
our
get
our prices are equal to downtown, we right.
Correct. Coming to this, the learnings part of it. So see, we try to understand that whether the design, the modular structure is right. Are we overdoing the capex? So we start from that perspective. Sometimes what happens, maybe initially the kind of capex that we are committing is not justifiable by the volume of the traffic that you are going to get. So whether the right kind of capex is there, the right implementation period has been chosen, we have some cushion. We are not putting too tight kind of things. If there are any irritations in the concession agreement, we have discussed this threadbare. If sometimes we have been able to get some modifications done, which were innocuous although, but leads to interpretation issues at the later date. So we try to go through all those documents, and of course, the thing I was mentioning that the right kind of EPC contractor, some cushions built in here and there. You have contingency as a part of the project cost, adequate contingency. So sometimes we all believe that things will be right. For example, the projects which are coming up during the COVID period. So suddenly we found that the pace became slow. So you already have a debt on the books of the project, and then the pace goes slow. That means the interest during construction goes up. So all those kind of eventualities, some cushion should be available to take care that things remain in the right frame kind of thing. Broadly, if the execution entities are right, we haven't really been worried about that part, and the money on both sides is on the table. So equity visibility has not been a challenge. So those kind of things. The overall experience has been quite good vis-a-vis the other sectors, if I put it that way.
Okay. Thank you, Mr. Sharma. So your experience also echoes with our credit perspective also, where in the greenfield, the risk remain high, and you have highlighted the risk mitigations to box all those type of risk. And once the asset become operational, the risk would remain relatively lower because of the stable regulatory environment. So thank you, sir, for your inputs. We can take the questions from audience now. And before we take the question from the audience, my last question is there. I can ask one quick question to Mr. Sundeep. So, how do you foresee the cargo growth potential in India vis-a-vis the global peers? Then we will quickly take the questions. Yeah, Mr. Sundeep.
Oh, very good question. And in fact, I was looking at the cargo projections in your presentation at a 9% CAGR, which looks also very promising. Now, I think cargo in a way has to be linked to the overall pickup in the industrial or the manufacturing activity in a country or in a region. Now, one of the things I think which came out very clearly from the last GDP growth was a substantial pickup in the manufacturing activity or industrial activity in India. Now, this will anyway translate to a higher growth potential at Indian airports. So that is one. Secondly, I think the market in India, the overall size of the cargo market in India is relatively still untapped. So, like I think you did mention examples of larger airports in Asia, which handle almost 2 or maybe even 2 to 3 million tons of cargo, which is probably equal to the total cargo which is handled by all Indian airports at this point of time. So definitely the potential is very promising, looks to be in line with the traffic growth, what we are seeing for the passengers also.
So now looking at the questions from the audience. So the first question is from Vidhi Gandhi. So that is again to Mr. Sundeep. So in case of a global airport operator, what is the difference in PPP experience in India versus abroad? That is the question. So partly I think you have addressed, but you can elaborate further, Mr. Sundeep.
No, good question. In fact, from Zurich Airport's perspective, we were earlier involved in the development of Bangalore Airport, which was a greenfield airport. And now we are involved in developing Noida Airport. So definitely our experience has been very good, I would say. We look at this market as a very promising market. I think the market is on a very strong long-term growth potential. There is no doubt about it. We also see a very strong pipeline of opportunities available in this market. And like what Mr. Babu mentioned, we will also look forward to upcoming opportunities. So definitely it's a focus market for our investments.
Thank you. So there is a question on the dual airports. So I would like to ask to Mr. Babu this question. So the question is, yeah.
If you are talking about the dual airports, the first dual airports now we have had experience now in Goa, which has got Dabolim as well as Mopai airports. So,
yes, correct.
Actually unleashed the potential. The Goa, when Dabolim was operating, the connectivity to that Goa was hardly 16 or 17 cities, mostly metropolitan cities. It was not connected to anything. The moment Goa is basically a destination, it is a holiday destination in India, the premium, where the people would like to go and spend time. So the moment the second airport has come up, it has unleashed the potential. The system traffic is growing exponentially. So we see that dual airports are, instead of competing, actually they are complementing, they are helping for the growth. That is as far as the tourism area is concerned. When it comes to the Delhi, of course, Delhi as an airport, we have already had a 70 million traffic. We have already done this year, expected to cross. And we are building the capacity for 100 million. So in the next 3-4 years, we will certainly reach the saturation. In the meantime, naturally, you require another airport to complement for the traffic growth. So we expect by 2030, the system traffic Delhi, entire NCR can touch almost 175 million. And today, which is about 75 to 80 million. So in that scenario, you require the dual airports to meet the demand of the traffic and also to provide the experience to the passengers. So we don't think that they're competing each other, but actually they complement and provide the seamless experience to the passengers. That is what our view always.
Understood, sir. And the connecting question to you only from Ms. Vidhi Gandhi. So any enabling provisioning in concession agreement to safeguard the developer in case of any traffic diversion due to dual airports?
No, there is no such specific concession agreement. For example, in case of Hyderabad concession agreement, the only provision available is in a radius of 150 kilometers, no new airport can come up. Beyond that, in case of the Delhi, we didn't have even that, we have only ROFR available. Otherwise, that the concession agreement does not talk about it. It is aviation for airlines, it is economics. So they always look at it, which airport is cheaper and which airport is nearer, where the traffic is available. It is a demand and supply situation. There are no specific clauses in the concession agreement which protects a particular airport. There are no such clauses.
Okay. Another question is from Mr. Amit Nanda from IDBI Bank. And this is also to Mr. Babu or Mr. Malik, any one of you can address. Keeping in the view of existing no airports and no aircrafts in operation, do you see operational hindrances for the ordered aircraft? It becomes more potential due to fact that the many metro airports are running at a peak capacity. So I think Mr. Babu, you can answer.
Basically, see, ATRs will take more time, smaller aircrafts. So where you have got a luxury of the time, where see a maximum ATMs can go up to 40-42 per hour. Metro airports like Mumbai, naturally they try to avoid all ATRs. They don't require, they don't want, because that takes more time for takeoff or landing. It takes away the runway time. Naturally, we look for bigger aircrafts like minimum 737 or 320 or bigger aircraft. ATRs we always try to avoid in metropolitan cities. But in case of non-peak or coming up airport like Zurich, they will suddenly, allow the operations of the ATRs as and when there is not much demand or not much pressure on the runways. Otherwise, ATRs, in case of metropolitan airports, we try to avoid or push them to the non-peak hours only.
Okay. So next question is to Mr. Sundeep. So how the technological advancement can play the role in enhancing the non-aero revenue?
Yes, I think now this is gaining a lot of importance. Technology, innovation. I think we see a lot of airports setting up their own innovation labs as well, which is a good sign. Now, I think overall, if we look at the passenger experience, technology will play an important role. So not only for the non-aero revenues, but even for the overall passenger experience. But specifically for this question, I would say that we would expect our commercial concessionaires, say whether they are duty-free operators or they are into other lines of business, they will be investing in digital technologies. I think this can help to improve the passenger experience. Like give you an example, it could be a mobile-based app, or you could also provide digital payment solutions for the passengers. So that is one important area. Secondly, I think concessionaires can also make use of digital marketing channels, say such as social media. The idea there will be to increase the customer base, or overall increase the number of customers who end up buying or spending at an airport. I think the third aspect in relation to technology could also be the passenger preferences. The customer preferences can also be analyzed, and the concessionaires can create more of a personalized experience for such kind of passengers. And last but not the least, it's also related to your product offerings. And when I say product offerings, passengers do have preferences, local preferences as well. They will also have preferences for global brands as well. So I think that also has to be factored in the overall technology planning.
Okay. So we have also some other questions, but due to paucity of time, we will take the last question, and that is from Rajeshri. Are there adequate ring fencing mechanism to trap non-aero revenues earned by subsidiary company of airport company for the purpose of tariff setting and debt servicing? So I think Mr. Babu can answer.
Yeah, see, that means as far as subsidiaries are concerned, when it comes to non-aeronautical revenue, we should try to understand fundamentally, airport operator does not do non-aero business. He only concession out to all the concessioners. So, for example, Delhi Airport, we have got more than 350 concessioners. So, who operates various businesses within the airport. Whether the business is done by the subsidiary, whether it's done by the concessioner, it does not make difference as far as the airport is concerned. They continue to get their own revenue share or license fee, whatever is defined in the tender document. So there is nothing that it has been trapped in the subsidiary companies, if I understand that question, whether there is any airports are losing some revenues. It does not happen that way. That much only we can clarify, Maulesh.
Okay, understood, sir. So I think we had a very interesting session today, and more importantly, we have gotten clear answer from our esteemed panelists, and we all agree that Indian airports are set to scale new heights, enabling policies for hub and spoke model, speedier issuance of the first tariff order, and resolution of the supply chain issues faced currently are important for attracting more and more investment into the sector. All in all, we all agree that for attaining and sustaining new heights for India in airport sector require firing from all cylinders. So thank you once again, Mr. Sharma, Mr. Babu, and Mr. Sundeep, for your deep insights and patiently answering all the queries of participants that were posed within the time constraint. I am privileged to host you all today. Thank you all participants for joining us. Thank you very much. Handing over session to Divya for a closing remarks.
Thank you, Maulesh, for moderating the session, and Palak and Urvesh for your presentation. Once again, thanking all our guest speakers for their insightful views. It was indeed a pleasure to host you. And lastly, thank you to all the participants for taking the time out and being a part of this CareEdge webinar. For any further queries, feedback, or suggestion, please write to us in the feedback mail. Goodbye for now, and requesting the tech team to kindly log off. Thank you so much.